Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 16th of December, 2021. And we're producing our regular morning update, providing prices, news, and economic data to be announced. Today we see gold and silver have risen after what much of the news media is publishing as a very hawkish position taken by the Fed. We wonder whether that is true. So let's take a look. Welcome to Illuminati Silver. It's Thursday, the 16th of December, 2021, at 10:46 in the morning. The weather today is Arcadian. Yes, it's relatively simple, if not a little dull. It's Arcadian. However, yesterday was anything but simple or Arcadian, as we had the announcement from the Federal Reserve what it intended to do concerning interest rates. And we shall take a look at that in just a moment, but also acknowledge that today we will find out what the Bank of England will do, and even the European Central Bank are now commenting too on their decision day. So let's look at what happened with Jerome Powell and the FOMC. Powell declares inflation big threat as Fed signals rate hikes. Federal Reserve Chair Jerome Powell signaled on Wednesday that inflation is now enemy number one to keeping the US economic expansion on track and returning the labor market to something approaching ebullient pre-pandemic levels. In an abrupt policy pivot, the Fed sped up the drawdown of its asset purchase program and laid out a roadmap for a series of interest rate increases over coming years, starting with 3 hikes in 2022. Powell also raised the possibility that the central bank might begin to withdraw liquidity from the financial system before too long by reducing its massive balance sheet. Quote, "One of the two big threats to getting back to maximum employment is actually high inflation," Powell said during a press briefing, adding that the pandemic was the other. "What we need is another long expansion like the ones we've been having over the last 40 years. Financial markets took the shift in the Fed's rhetoric in stride, with investors betting that the central bank can pull off a proverbial soft landing of the economy, reining in rapid price gains with gradual increases in rates that don't materially damage gross domestic product. Stock prices posted the biggest rally since 2020 on the day of a Fed decision. Now we'll take a look in a few moments as to what happened to equities and also the bullish action of gold and silver. And one wonders, well, if they're introducing interest rate hikes, why have gold and silver risen? We can give you 3 answers to that. The first, a very simple one, because it had fallen before the announcement to such a degree that short of him raising rates immediately, it was always going to rise. The second answer to that is, to some extent, the market is a little confused because although this appears rather hawkish, when you actually look at the detail, it's almost the opposite, because interest rates are not going to rise before June of 2022 at best, and he has already restricted those rises to 0.25% at a time. So it's not quite as hawkish as he let on. And the third reason we will cover in a video that we will publish later today. We will do quite a detailed video, although we'll try and keep it short, within 10 minutes or so, on the Fed's decision and what that is likely to do now to gold and silver prices. And we'll try and produce that actually after the Bank of England's announcement on what it's doing as well. So maybe in UK time it'll be about 6 p.m. Bank of England policy call pits Omicron against inflation decision guide. The Bank of England on Thursday will decide whether to pull the trigger on its first interest rate increase since the pandemic began, weighing a surge in inflation against a surge in coronavirus infections. After delaying a hike in November to wait for more information about the labour market, discussion has turned towards the risk that the Omicron variant of the virus may overwhelm a sputtering economic recovery. Data since the last decision suggests strong upward pressure on wages and consumer prices. Inflation jumped to 5.1% in November, which is more than double the central bank's target. Let's see if the UK also threatens hawkish words, but undertakes dovish behaviour. European Central Bank to chart exit from pandemic crisis mode, decision day guide. The European Central Bank is poised to unveil a gradual withdrawal from extraordinary pandemic stimulus in the face of soaring inflation, whose path is further clouded by the Omicron coronavirus variant. Are we getting a theme here? At a pivotal meeting on Thursday, President Christine Lagarde is expected to confirm that net bond buying under the €1.85 trillion programme known as PEP will end as scheduled in March. A regular asset purchase plan may be recalibrated to smooth the wind down, but in the absence of a consensus on the health and economic dangers posed by the new strain of COVID-19, officials will be keen to retain flexibility and may even delay some decisions. We shall look forward to that. Business news by the BBC. Firms plead for help as customer cancels bookings. France to drastically restrict travel from the United Kingdom. How would an interest rate rise affect you in the US and Canada? Broadly, not a lot about the Federal Reserve apart from this small entry here. Federal Reserve takes tougher stance on inflation. Well, it was so tough that the dollar actually went down slightly and is currently standing at 96.20. Had it been as tough as the news media would have you believe, then that would have jumped well above 97. Energy prices up $0.75. Stock markets, yes, it was so tough that the stock markets actually liked it. Whereas we all know that in an interest rising environment, the stocks that tend to do well tend to be financials more than anything else, not the whole market. Well, we can see that in America, stocks were rising between 1 and 2%. Asia Pacific overnight, 1-2%. UK and European markets, 1 to 1.5% higher. So much so for this really tough stance. We also had yesterday other economic news. The retail sales were down for November at 0.3%. Now, when we say down, it's a positive 0.3%, but that's against an expectation of 0.8 and against 1.8 in October. This is part of the reason why they've not been more aggressive than they have. Import prices are actually up against expectations by 0.1%. The Empire State Manufacturing Index, though, has done well and is higher in December than it was in November and higher than expectations. The NAHB Home Builders Index, as expected. Business inventories revision marginally higher than anticipated, and the sales ratio as expected. Now today we have the jobless claims reports, which will probably be marginally improving or marginally declining. In either case, they will justify why the bank has not necessarily introduced even stricter measures. Building permits and housing starts are also coming out, together with the Philadelphia Fed Manufacturing Index and the Industrial Production Index. But we're going to be looking more closely today at the Market Manufacturing Flash PMI and the Services Flash PMI, whereas the full PMIs, which I suspect will be next week, will be more relevant. But this will give us a good indication. So what's happened to gold and silver? I'll refresh the page for when we originally set it. Gold is up $18 at $17.87. Now, some people will be heralding this is the start now of the breakout and gold is rising to 1900 and 2000 and so on anytime soon. It should certainly strengthen after what the Fed has done. But that said, let's see what the UK and Europe does too, because it's all relevant. And yes, after the news yesterday, we saw a rise in price, and today we've seen a rise in the price of gold. But we've got to put this into perspective. It's 1787 now. Friday's close, it was 1783. So you can see on the chart the big dip that we had on Wednesday. And then after Jerome Powell's comments, we could see the rise. Silver prices have also benefited. Silver is up 40 cents at 22.23, exactly the same pattern. But again, to put it into perspective, silver closed last week at 22.20, so it's only 3 cents higher than Friday's close. So it's made up the lost ground. The issue for many will be, will it continue to rise? And we'll cover that in this afternoon's video. Cryptocurrency markets benefiting because the equity markets have benefited. And you can see now that the crypto markets are up 3% at a market cap of 2.27 trillion, with Bitcoin now above 49,000. That's it for now. Please have a look at the videos we've produced earlier this week. We have said in a video that we published a few days ago why Wednesday is crucial for gold and silver prices, and we've put a link to that in the description box below. That's been one of our more popular videos. And this afternoon we'll state what the after effects of that decision is likely to be. Thank you for listening. Please subscribe, press the bell sign, give us a thumbs up. Until our video this afternoon. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.